So walk me through how you're feeling coming into the second half of the year. What are some of the trends that you're seeing in the recovery broadly?
Yeah, the second half is looking a lot better than I imagined. We are seeing very, very strong demand for travel. Our digital businesses are also picking up ahead of steam, and so much more optimistic. From travel's perspective, we're probably about 6 months behind Europe. Most of Asia is open, bar North Asia, and I think by the end of the year that will be solved as well.
And the aviation sector is finally getting back to business after its worst shock in history, I guess you could call it. How sustainable is the recovery, in your view, Tony? Are we really out of the woods just yet?
Yeah, I mean, I think so. I mean, there's a lot of stuff to be done. Many of us have planes out of service. At AirAsia, we've got 100 planes flying out of our 212 planes. We're furiously trying to get them all back in service through maintenance and heavy checks. On the labor front, we're good. On the airport side, we see a lot of infrastructure problems in Europe, but Asia seems to be in a better position to handle the return. So I think it is sustainable. I think there's a huge demand. I think in some ways, talking about trends, I think people who haven't traveled for a long time, they now see the value of travel, and people are prepared to pay more. And I think travel has gone up in one's consumption pattern. So yes, I do think it's sustainable.
I wanted to ask you about some of the specifics of what we're seeing in the aviation industry in just a moment. But first, let's focus in on you. And I wanted to ask you about how you're feeling right now coming through this recovery, because you have come through what has probably been two of the most challenging years of your entire career. So, Tony, could you just reflect on the crisis in aviation, the impact that it's had on you personally and the business broadly?
Yeah, surreal, really. You know, when you ask that question, it's horrific to think of those 2 years, because there were days where we didn't have a single aircraft flying. There were days, many, many days, where I could look out of my office and see not a single person on a tarmac. It was like something out of a movie. So very, very tough years. Did make me stronger, without a doubt. We didn't put our head in the sand and cry. We went out and built new digital businesses out of our data. But very satisfying to have survived it. I tell all my staff, you know, many of our ancestors would have been talking about surviving the war. In many ways, going through COVID was like a wartime experience for us. Going from 15 billion worth of revenue to zero is not something they can teach you in business school. So it is a once-in-a-lifetime experience, and we've survived it. And I think just by surviving it, we have won, and hopefully we'll come back much stronger.
And speaking of business school, what would you say is the best lesson you've learned coming out of the pandemic?
Well, I don't think there's anything new I've learned. In that we've gone through many crises. Of course, this is the pinnacle of crisis. But openness, transparency, you know, being as transparent as you can with your partners, who you owe a lot of money to, in terms of being transparent to your staff, and putting your head down and finding solutions. You know, the biggest problem in COVID was the unknown. You never knew when it was going to end. And so it was like a never-ending story almost, you know, one of these trilogies that keep going on and on and on. So I think the biggest lesson is again, being as transparent as possible, and through the support of our partners, the immense energy of our staff, we've been able to ride COVID out. We've still got a lot of challenges ahead of us, but certainly the toughest challenges are behind us now. The toughest thing, I didn't answer your question, but the toughest thing for me was, you know, making staff redundant, putting them on furlough. We had never done that in our 21 years. And my job now is to ensure that everyone comes back, that deserves to come back, because they did nothing wrong. You know, the biggest problem also was that for 21 years, everyone loved to work with us, but many partners, not many to be fair, suddenly forgot when, we weren't flying, and forgot that this COVID is nothing, something we didn't invent. We have these problems because of a virus. It's also for the staff, they did nothing wrong. So that was the toughest thing for me, was seeing partners just drop us like a hot potato, and two, having to make staff redundant who did nothing wrong. But gladly, both of these areas are now recovering.
And as you track through the recovery, I know one of the most major changes that you've made is this significant reshaping of the organisation, but also a really important rebrand. Now capital A, I guess, better reflecting the diversity of your interests. What are some of the priorities under that rebrand? And just walk me through that decision to change the structure here.
Well, COVID put us in a position where, we had no planes flying. Averagely over 2 years, we only had about 20 planes flying a month. That was up 10% of our fleet. So, rather than sit still and do nothing, this was a once-in-a-lifetime chance where you had everyone at home to rethink and repivot. Our strongest asset was actually our data and our huge coverage around Southeast Asia. So we had a 700 million market and a database that reflected that 700 million market. So we decided to look at the assets within the group, our data, our website and app, our enormous payment infrastructure, and build 3 great digital businesses, Big Pay, our fintech business, take our very popular app and make it into a travel and lifestyle app, AirAsia Super App, and finally our logistics business. We also then took out our engineering business, which has run the lowest cost airline business for 20 years, and created a separate company called ADE to be hopefully one of the preeminent MROs in Asia. And we were known as AirAsia Group, but as long as you're known as AirAsia Group, people only saw us as an airline. So we rebranded a capital A, as you rightly said, to tell people that we're much more than an airline.
And now you're at the point where you're actually looking at a New York Stock Exchange listing as soon as next year. Is that correct? What can you tell me?
Well, yeah, we've restructured AirAsia Aviation. We've got a little bit more work to do. We're going to take out our ground handling company, joint venture with SATS of Singapore, and our in-flight catering company, Santan. And then the aviation group will be pure aviation, representing the 4 airlines presently, Malaysia, Indonesia, Philippines, and Thailand, serving a 700 million market, lowest cost airline. And we thought it was time to, that's privately held now, relist that in the States. And hopefully we can do that sometime next year. We're furiously working on the compliance side to get that done.
So what is the appetite from investors here in your view? Food and parcel deliveries, ride-hailing, digital payments, fintech. What's the disruptive element there? Because some might say you're perhaps a little late to the party, and the party's looking pretty crowded already, Tony.
Yeah, no, okay, so we got the aviation group, the digital businesses. If you think about it, the airline came up 20 years ago, very, very late to the party. But we ended up being the 4th largest airline in Asia. In the Super App case, we're predominantly a travel company. There's only really one big one in Southeast Asia, which is Traveloka, and then there's Expedia and Agoda. But a large percentage of flights in ASEAN are on AirAsia. So pairing them up with hotels and other travel necessities is easier when you have all those flights. And our brand is so big that there's no reason why we can't be one of the biggest travel aggregators in Southeast Asia, along with Traveloka. Coupled with delivery, it follows the same mode of operation. We move people in the air. We can move boxes and people on the ground. Our ride-hailing has already done 1.2 million rides. We're very low cost. We're EBITDA positive, and we're very, very bullish about the ride-hailing business. The biggest kind of disruption is really the ability to combine flying and ride-hailing with food delivery. And it all comes out of a very, very powerful ecosystem, which is held together by a loyalty system, the biggest loyalty system in Southeast Asia, big loyalty. So we feel the disruption is exactly as we did in the airline business, creating a community, creating add value back to the customers in the form of low prices consistently through low costs, and creating a community of content and communication. So we're quietly optimistic. You know, in the early days, people were saying, oh, you're not growing as quick as these other super apps. And I said, well, we're very focused on profitability. We're not going to just grow and have huge losses. I think our time has come because our super app certainly will be break even by the third quarter and making profits, third and fourth quarter. Our logistics division, Teleport, is already profitable. And our fintech division, Big Pay, where we want to disrupt the whole financial services by allowing everyone to be inclusive. Right now, financial services are only for the few, in the same way when I started AirAsia, flying was only for 6% of Malaysians. So by bringing financially inclusive products, we believe we have a huge opportunity to disrupt fintech market, be profitable through low cost, and reach the 700 million market.
How advanced are those listing plans, and do you actually have a date set yet?
The airline side, I mean, obviously a lot depends on the regulators. We would hope to submit something by the middle of next year. In terms of digital side, we're just going through all that. We want to build a bit more momentum in terms of earnings, especially after the recent tech rout. So I'd say more likely towards the end of 23 or 24 for the super app. And in terms of the logistics division and Big Pay, we're not looking at a listing at the moment.
I wanted to ask you about some of the macro trends impacting business globally today as well, Tony. I appreciate your take on this because soaring inflation basically means that the input cost of everything is going up, including fuel, which has really jumped since Russia's invasion of Ukraine. When you look at this inflation dynamic, do you think rising costs are ultimately going to derail some of this recovery?
Not on the airline side so much because we have so much pent-up demand. But I do think we're heading for tougher times. There's no two ways about it. Inflation is a problem. High input costs will eventually come in. And I think the economy will slow down quite dramatically. We are a beneficiary of that in some ways, having been through a few slowdowns, that any low-cost business is generally a beneficiary of a slowdown in a tightening economy. But I see a massive demand for travel. People just have been starved of it for almost 3 years now, that I see no dip in travel, especially at our space, short-haul, low-cost travel.
What about these issues in the manpower market? Do you think the industry should have been better prepared for the aviation rebound? We're seeing enormous disruptions as it stands at airports around the world as demand spikes, but issues within the manpower market and in supply chains continue to be a big problem here. Why wasn't the sector ready for the recovery?
I think in Asia, the airports have handled it much better, but we're not in full, we're not fully, all the capacity is not back. So you're seeing a kind of false situation in Asia, as opposed to Europe, where most of the capacity is back. It's easy to sit back and be an armchair critic and say, should they have been prepared? But frankly, all of us, one day it was still locked down, the next day it was open. I can give you my own story on planes. We've sold more tickets than we had planes, but when we took our maintenance schedules, we thought we would be able to fix planes every 2 weeks. But after not flying for 2 years, you're going to find a lot more things that need to be fixed. So the average maintenance cycle has gone from 2 weeks to 4 weeks. No one could have predicted that, but we have to plan ahead. We can't plan just for the next day. So I think people have been harsh on the aviation business. They got to remember that, most of us have not flown for almost 3 years, Asia even harder than Europe. And it's hard to plan these things. You mentioned it in your opening gambit. This is the worst period for aviation in the history of aviation. And so, returning from such a long hiatus, it's going to have some teething problems. You don't play football for 2 years, you go and pick up and play in a pitch, you're going to discover new muscles that you never did. These are unprecedented times. and it will be sorted. And I don't think anyone could have planned for this. In the same way, we couldn't have planned for the fact that 200 aircraft suddenly are not flying.
And Tony, talk of a recession, is it overblown or a genuine threat?
Oh, I think it's a genuine threat, without a doubt. There have been so many bubbles in the economy. You know, you had the crypto bubble, you had the tech bubble, you've got huge inflationary bubbles in property all over the world. And, you know, there was a lot of economies that pumped a lot of liquidity into the market, which has caused a lot of these bubbles. But like anything, these bubbles have burst and people's real wealth have gone down. I'm an old-fashioned man who believes in cash. There's a hell of a lot of debt in the market. And so the economy probably needs a clean out and return to some sensible market practices. You know, we've seen valuations on some tech stocks which frankly looks like a fairy tale. Disneyland could have produced some better stories. And so I think it's not a bad thing to get a cooling, and a lot of hot money needs to go out of the economy. And we go back to sensible productivity measurements.
What about the policy response to the pandemic as well?
Well, I think that again is like the airline business. Hindsight is a wonderful thing. Were lockdowns the right way? Were, you know, shoving a lot of cheap money into the economy the right way? Hopefully, people have learned from this. There'll be a lot of examinations on what was right and what was wrong. But again, like the airline business, it's hard to blame policy makers because this was unprecedented in the history of mankind. And so, you know, hindsight is a wonderful thing. You know, personally, I feel lockdowns were a problem, and it could have been done better. But, you know, as I said, hindsight's a wonderful thing.
And looking ahead, Tony, airlines are constantly banging the drum and reminding us that the aviation recovery should be green and sustainable. When it comes to moving ahead in some of these areas, is it going to be a focus on aviation fuel? Is it going to be hydrogen? Is it going to be electricity? Where do you think the focus should be for the sector? Again, that's down to the airline manufacturers, but I like the sound of hydrogen. I think electric will be a long, long time. We have purchased eVTOL aircraft, electric vertical takeoff aircraft, and just from learning about that, I mean, you know, the thrust required for that and the power required for a 6-seater is completely different from an aircraft that's carrying 180 people. So I think electric is a long way off. I do want to add, you know, the aviation industry gets massive amount of stick for environmental issues. I want to give you another, everyone's, you know, is the buzzword, and I love it. I own one myself, an electric car. But people forget, how is the electricity generated? So you may have a green car, but the power generated may come from coal, which would be very environmentally unfriendly. So I think policymakers, it's sexy to hammer the airline industry. Airlines give out 3% of carbon emissions. There are many bigger targets in the world, and many regulators are now forgetting about the green policy because of Ukraine, Russia. So I think we need sensible policies. Do not tax the aviation industry unnecessarily, and do the right things for the long term. And look at the biggest, you know, even the farming industry, the beef industry creates more gases than the airline industry. And just finally, Tony, what would you say is the biggest challenge to the global aviation sector recovery today? And as an extension to that, where's the next best opportunity?
Well, let's talk about the next best opportunity. I mean, I think I'm a big believer in electric vertical takeoff aircraft. I think that's going to open up a huge new business opportunity for logistics, for tourism, and for short-haul travel, for efficiency. I think that's the next big opportunity for the airline industry. In terms of the challenges ahead, I think regulators have to look at the capital structures of airlines. We still have some really antiquated ownership rules. People should be allowed to own 100% of an airline. There's no risk of not having local participation anymore. And I think the aviation industry globally needs to work together in terms of air traffic control, navigation, to reduce carbon emissions and to increase efficiencies around the world. I would also like to see immigration authorities, with all the data we have now, do we need to really stand around in a passport queue? Can you be pre-cleared before you get on the aircraft? And so when you arrive in your country, it's maybe scan your photo, they have every information already. And so I think there's some challenges at the airports which have caused some of these issues, bottlenecks of luggage and immigration queues, etc., which I think can all be handled better with technology going forward. I think that is actually an opportunity for airports to improve.